Let's just take a look at gold in this parabolic phase, because this is kind of how it plays off. If we go look back in the 70s, we saw this huge parabolic move to the upside. We did see a parabolic move going into 2008 markets, 2007, 2008 market top, which it looks dwarfed because price has gone higher. We see multiple of these waves, and usually these are usually near the end of gold and silver having a bit of a run, and they're going to have some correction. So a good view of this too, just before we jump into a little bit more detail, look at the chart of silver. I mean, parabolic moves, generally what goes straight up when everybody who's open to investing in that moves in at the same time, usually these moves fizzle out. You could give this chart to a fifth grader and say,
Gold's rapid spike triggered waves of fear of missing out, pushing even skeptical investors into the market. That kind of stampede rarely lasts without turbulence. The current pullback isn't the collapse some assume. It mirrors classic exhaustion patterns seen before, explosive moves higher. Silver too has rocketed to near vertical levels, a sign that enthusiasm reached a breaking point. When everyone rushes in at once, momentum eventually needs to reset. Price fluctuations now reflect shifting psychology. Greed gave way to uncertainty. The downturn is actually healthy, helping shake out late buyers. What comes after may define the next chapter of wealth preservation.
Yeah, I mean, there's a lot of action in the gold space. This is, if we look at my charts here, we've got a daily chart of gold really showing over the past more or less 2 years. It's just been up and to the right. I think the big thing right now is I believe we're getting closer to potentially one more big rally in the precious metals space, simply because I think we're in this getting close to a major financial reset. And we'll get into this, but gold and silver are warning us that something big and bad is coming. We just don't know what it is. And when we look at the recent price action, obviously we've seen gold really go parabolic. And if we look at the volume, on the volume side, this is telling us, like, people who are open to buying gold, who are open-minded to get into it, they're piling in. And really, we saw about 20 days ago a massive wave of FOMO. If people just, they couldn't take it anymore. If they're not in gold, silver, or miners, they have to get in. And so we saw this FOMO move. And I talked about this as it was unfolding, and we got to get ready for some sharp pullback, because the market is going to try and buck out late comers temporarily. And I do think we're going to see gold and silver shoot a lot higher. But right now it's having a really nice correction. And in fact, believe it or not, it's a fairly controlled correction. When we have a momentum move where something goes kind of parabolic.
For decades, predictions of currency collapse and runaway gold prices have echoed across markets. Yet history teaches a humbling lesson. Strong fundamental arguments don't guarantee steady gains. Even companies with booming earnings can lose half their value during risk-off cycles. Gold is no exception. Markets move with emotion long before logic. Still, today's environment is unique. Central banks are increasing gold reserves at the fastest pace since the 1960s, while sovereign debt hits record highs. The narrative of financial fragility isn't just opinion, it's visible in data worldwide. But timing remains the million-dollar question.
And I guess I should just kind of go back one step. Let's just take a look at gold in this parabolic phase, because this is kind of how it plays off. If we go look back in the 70s, we saw this huge parabolic move to the upside. We did see a parabolic move going into 2008 markets, 2007, 2008 market top, which it looks dwarfed because price has gone higher. We see multiple of these waves, and usually these are usually near the end of gold and silver having a bit of a run, and they're going to have some correction. So a good view of this too, just before we jump into a little bit more detail, look at the chart of silver. I mean, parabolic moves, generally what goes straight up when everybody who's open to investing in that moves in at the same time, usually these moves fizzle out. You could give this chart to a fifth grader and say, what do you think is going to happen next, right? And they're most likely going to say, it's going to go down. So this isn't generally really rocket science. It's just understanding cycles, human psychology. We've seen, everyone now is, people chase money. They chase returns. And so when things take off without them and they have a huge move and they feel like everybody's making money but them and they're missing out, they create this feeding frenzy because they just keep buying. They don't care what price they get into. So that's the phase we're in. The spike in gold and silver are telling us something is wrong. Something is likely going to break in the economy or globally, and we just need to be aware of that. So if we were to kind of look more so in the daily chart of gold, we've got this nice pattern I was just mentioning. It's actually a controlled pullback. Anybody who kind of bought right into this phase where the FOMO in the air was so thick you could cut it with a knife, a lot of people think it's out of control, it's put in a top, but this is actually a pullback. It's got a little bit of a bear flag. It's got another pullback. It's kind of made its three-wave move to the downside, an ABC correction. And it's the break of this little pivot low right through here usually creates a flush out, and gold usually wants to put a bottom in after this. It's this type of price action. Maybe we see gold pull back a little bit more, but this is actually a very healthy price. And usually we should see gold stabilize, and then I think we're going to see it skyrocket higher for another big push as we get into some other charts. I can show kind of where I think we are in this major cycle. So I'm very bullish in metals still, and it's interesting because back 20 days ago I was telling everyone I think we're about to see a bit of a correction here, and now everybody seems to be really scared and they don't want to get back into gold, and they've been scared out of it. And that's a good sign, because if people are scared and they've gotten out, usually that means gold's putting in a bottom. And so I think it's the same across the board for gold, silver, and miners. People have gone from they have to have it to now they're scared. They're scared out of it, a lot of people, and they're scared to get back into it. So this is a good sign. I think we're gold and silver carving out a bottom.
A striking parallel emerges when comparing today's charts to the period just before the 2008 crisis. Back then, stocks hit record highs, while gold quietly signaled trouble beneath the surface. As confidence eroded, the metals launched upward, right before markets unraveled. We are witnessing a similar structure now. Equities remain elevated, yet gold has already begun hinting at hidden instability. Investors are migrating toward physical assets, skeptical of digital money and fragile trust. When stocks struggle to deliver returns, capital seeks refuge and profit elsewhere. Historically, that migration becomes a powerful engine for explosive precious metal rallies.
I think we're going to have one more big push. I mean, the fundamental case for gold and silver have been bullish since the day I was born. I mean, I've been in this industry for 25 years, and everybody's always talked about the dollar collapsing and gold and silver to the moon. So, I mean, I have learned a long time ago that it doesn't matter what the fundamentals are. Price is still going to do its own thing, and they don't have to follow fundamentals. And back in 2000, I was buying some of the strongest stocks. They were literally having quarterly growth, the highest quarterly growth, quarter after quarter, and their share price still got cut in half, and then it would fall and get cut in half again because there was a bear market. We saw a big unwinding in the risk-on assets. So I've learned a long time ago that it doesn't matter what the fundamentals are. It's nice when the fundamentals support the technical, the actual price action, but you really do need to focus on price and not get sucked into the hype, into all these stories of the world collapsing and all of that stuff, because it's been going on since the day of dawn here, age dawn, and the world hasn't fallen apart, and gold hasn't gone to 25,000 like people were talking 20 years ago. So that's kind of the scenario to look at gold, is to just focus on the price action. And yes, the fundamentals and the stories and the big central banks buying gold, it's all a really bullish story. But the price charts still are the end result. Either people are buying it or they're selling it. And it doesn't matter why they're buying it. It's gold is going up because people want it, or it's going down because they're nervous. And every time we have a financial reset or there's a giant parabolic move in gold and silver, it's always for a different reason. There's always a different reason behind it, but price does the same thing. It goes up or down. It's being bought because they want it or sold because they don't. So you can only take the news with a grain of salt here, because it's just it's not going to really predict where a price is going to go.
The buildup is already visible. Miners, silver, platinum, and palladium are drawing intense interest. Volume spikes suggest institutions are positioning early, while retail buyers follow emotionally. During major downturns, precious metals can initially fall with stocks, but they often recover faster and push higher once panic shifts into strategy. Meanwhile, the US dollar index has slumped, sparking headlines about inevitable collapse. Fear is contagious. Combined signals, weakening confidence, asset rotation, and defensive spending hint that a global market peak may be closer than most expect. When faith in financial systems fades, hard assets take center stage.
Yeah, so this is a really interesting comparison. The left chart is the 2007 stock market. This is the S&P 500, the candlestick chart. The yellow line is the price of gold. Now, both of them have been rallying for a couple of years together. And just like what we see on the right-hand side, we're seeing the stock market hit all-time highs. Gold has been rallying at the same time. When gold rallies, it's telling us that people don't trust the financial system. They don't trust the government. They don't trust the currencies. They're worried the stock market is going to collapse. Physical gold rallying is a warning sign that something big and global is about to happen. And so people want to get outside of the financial system and hold something with physical value. That's not just a bunch of ones and zeros on a computer that could, vaporize. So this comparison is really interesting because if we were to, we had this consolidation in gold back in 2006, 2007, and it blew up and took off to the upside as the stock market hit all-time highs. And then we started to see a little bit of weakness in the S&P 500, and we saw gold start to pull back a little bit. Well, I kind of believe we're somewhere similar. We have gold having its first pullback. We've got a little bit of a pullback in equities markets. It's still grinding higher, but we had this consolidation in gold really over several months. It really kind of traded sideways here, trying to figure out what it's going to do. So I think we're very close. Now, if we were to just fast forward to what happened in 2007, the stock market started to run out of steam and started to head lower. And as money came out of the equities market, it was looking for where can it go to make money. And so money came out of stocks and it went into precious metal space. You can see the yellow line shooting higher as more so the stock market fell. And so I believe we're going to see that. I think we're kind of right now in this kind of phase, the first hiccup in gold right now on this chart. And I think we're going to see the stock market eventually struggle and start to pull back, and money is going to flow into precious metals. And money's always looking for a return. As I mentioned before, money's chasing return. So if the stock market's not working, it moves to a different asset class. And this is, typical. It's asset rotation. It's when people are looking for a return, they need to go somewhere else. And depending where they move tells us how they're thinking and feeling. So gold has been outperforming for a couple of years. That is telling us there's a lot going on underneath the hood of the markets, underneath the hood of the economy. People aren't trusting it and people are looking for safety. So the really cool thing here is if we were to just kind of look at this chart. So if we go back and look at these multiple layers, the next chart down are gold miners. And what's interesting here is right as the stock market and gold were kind of putting in a top, we saw gold miners come to life. People started to pile in, big volume there. We also saw silver come to life. We saw platinum and palladium come to life. And of course, as we matured, they all shot higher as more so the market was getting closer to collapsing. And eventually, the stock market did collapse. And if we look at that, we can see the stock market fell 55%. And the problem with a big bear market is it will naturally pull all these precious metals down with it to some regard, and some of them down 60%. So if we were to fast forward to where we are kind of right now, we have the same scenario going on where everyone's piling into miners, into silver, into platinum and palladium. They've come to life. There's lots of volume. It feels like the crowded play. People have FOMO. They're chasing it after it's already had a multi-year run to the upside, and they're just now piling in, right? So this is the interesting scenario of what's unfolding. And when we look at it from one other layer, if we were to just kind of backtrack and compare these two windows here, if we look at the US dollar, get this dollar to show up here, you can see the green line here is the US dollar index. Of course, everyone hated the dollar. They said it was going to collapse. It was, way down in value. Well, if we look at where we are today and we put the dollar on it, the dollar has also had a big sell-off and it's undervalued and people hate it and they think it's going to collapse. So when you strip away the news and the reasoning behind, or the potential reasoning behind things, the charts are all showing the same type of setup. People are fearful. They sense something big and bad is coming. They don't trust the dollar. They don't trust the government. And all this kind of signifies that we're getting close to a major topping phase. And you may have seen this. I've shared this chart before, but if we just go back and look at the cycles within the stock market, this blue cycle here is the stock market top. And typically we see precious metals come to life just before the stock market goes off a cliff. And so that is one of the big, this is a big warning sign that something big and global is lurking just around the corner. We just don't know what it is yet or when it's going to actually happen.
Cycle patterns and historical behavior suggest gold may be preparing for a major surge, potentially 20–30% higher within months. Modern tension points are multiplying: geopolitical conflict, rising debt costs, shifting trade alliances, and de-dollarization efforts led by major economies like China and India. Even tech supply chains now depend on metals for semiconductors and clean energy transitions. Investor sentiment has flipped quickly from FOMO to fear, a classic bottom signal. Measured by Fibonacci projections and previous bubble phases, analysts see a possible run toward 5,000 plus hours per ounce. Gold's next move may redefine wealth for a generation.
I believe this big run here where we could see gold rally 15, 20, 30% is potentially just around the corner. This is really a multi-month pause or a multi-week pause potentially. Again, if we look at the charts and seasonality wise of gold, typically gold tops out in October, in the middle, early October. It sells off till kind of the end of November. So we've just seen this. Gold has started to pull back, and I would expect gold to struggle here for another 2 weeks or so. And then we go into the end of the year rally where gold could take off. And all this kind of aligns with what we've seen on the previous charts from 2007. So it's pretty exciting. I mean, I follow investor sentiment very closely. I've built tons of custom indicators to get a read on what people are thinking, feeling, and what they're doing with their money. And understanding the psychology of retail investors is huge. And we've kind of gone from a FOMO stage really in the gold space here. If I just go back to the chart of gold or silver, we've gone from this FOMO phase about 2.5 weeks ago to now people are actually nervous, and some of them actually don't want to get back in. They think gold's top. So it's gone from like, you must have it, I need to have it, to I don't know if I want to own it anymore. And if we were to just kind of look back on this chart, I do believe if we went back to the 70s, this same chart pattern unfolded, and it actually shows 100% upside for gold from this point forward. So when we're in a bubble phase and we're in this type of scenario, we don't know where the top is. We can only kind of take it one leg at a time. And, we could use Fibonacci extensions here to get an idea of where this next move could be based on this rally that we've seen over the last several months and this pullback. Using a Fibonacci extension, which is one of my favorite tools. It's also one of the most accurate tools I know. It's telling us we should see gold run to 5,100 over the next potentially few months here. And percentage-wise, it's about a 30% move, which is actually what happened in 2007, 2008, just as the stock market topped. We saw gold run another about 30%. So, it's a different time, but the market, as they say, it rhymes, right? It's going to be similar, I think, in terms of what happened before. It doesn't matter what the news is causing it. Investors still go in waves of buying and selling, and the charts paint that picture.